On today's episode of the Brisbane Property Podcast, it's market update time. And so we're going to be unpacking what's been happening in the Brisbane market throughout the month of August. We're going to track house price movement and unit price movement and predict what may be likely to happen in the months ahead. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hello, everyone, and welcome back to the Brisbane Property Podcast with Melinda and Scott Jennison, and it's market update time.
Yes, it is that time again. And as you all know, I have put some time into pulling together all of the latest data for Brisbane and surrounding regions to help you understand what's actually going on. We like to do this on a month-by-month basis, although we do know that small changes on a monthly basis is not what we need to focus on. But we do broaden out some of the results that we're going to be sharing with you to see what's been happening in the last quarter that can often show trends and also over the last 12 months and beyond.
I always get asked regularly at the moment from people what's happening in the Brisbane market. My answer generally is actually it's strong. It's still performing very well, and I think you'll find in the market update for August, which we're going through today, it's been another strong month for the Brisbane property market.
Yes, and I think it's really important for those who are tuning in, who are not here in Brisbane. Perhaps you're located interstate somewhere else in Australia or even somewhere overseas. What is happening in different segments of the market or different capital cities and regions around Australia is very different at the moment, despite the broader economic conditions being similar. So I think it's important to understand those local nuances, and that's why we like to bring you the most up-to-date information for Brisbane on a regular basis. So if you're not located here to see what's actually happening, you get that market snapshot of what we're seeing on the ground and also what that data is telling us.
And before we jump into all the data, if you're not up here, you're not actually experiencing the weather we have too. I might add that for Brisbane.
A weather update. We haven't had a weather update for a while.
A little bit brisk this morning when I went swimming at 5:30 this morning. I call it brisk. It was about, I think, 11 or 12 degrees, but beautiful time of the year. I love it this time of year. Not too hot, and it's not too cold. So if we jump into, as we're talking about the Brisbane market, dwelling values rose 1.1% in August, and a good quarterly growth, obviously. Slowed a little bit between May and August, but still a lot of potential of growth, Linda.
Yes, if we actually want to sum up what's happening in the Brisbane market, I guess the easiest way to sum it up is that the market is still strong and robust, although the rate of growth is easing. That's probably the easiest way to sum it up. So when we do look at those quarterly growth rates in the 3 months up to the end of May, Brisbane's greater region was sitting at a quarterly growth rate for all dwellings at 4.1%, whereas in the 3 months up to the end of August, that had declined slowly to growth of 2.9%. So yes, the growth is still positive, but the rate of growth is easing, and that is across the board, mainly in the house market, but it's across the board when we look at dwellings as a whole.
And Brisbane, obviously, when people will always look and compare it with other capitals, obviously compared to Perth and Adelaide are probably the other big performers around the nation, but what we see in Brisbane, the potential obviously going forward with the Olympics and all those types of things, really strong, remains one of the strongest performers, Brisbane, as I said, along with Perth and Adelaide.
Yes. So when we look at the 12-month growth performance here in Brisbane, we're sitting in second place behind Perth. Now, Perth has absolutely outperformed in the last 12 months with 24.4% growth across all dwellings. Brisbane came in at 15% growth over the same period. And then in third place, Adelaide, on par really, 14.9% capital growth across all dwellings. So these are remarkable results, especially when you look at other capital city markets. For example, Hobart declined 1.2%, Melbourne declined 1%, and Canberra, Darwin, changes of only 1.5 and 1.6% respectively. So we are seeing a big difference in the rate of growth across different segments of the market, across different areas within Australia. And it's so important for buyers and sellers to understand these local metrics to give them the best opportunity to get the best price if they're selling, but also to understand the market they're buying into if they're buying.
I know that you talked about dwellings there, and we talked nationwide dwellings, but Brisbane's unit market, it's outperformed the housing market, very, very strong, and it obviously shows then that unit market how it appeals for a diverse range of buyers.
Yeah.
So from your first home buyers to your investors looking for good yields and good growth, it's outperformed.
Yeah, it has. This is a sustained trend, I guess you could call it. We have been seeing that unit segment of the market outperform the house segment of the market here in Brisbane, and we'll go into the more specific details around the numbers shortly. But this trend, which has been ongoing now, it shows the increasing demand for more affordable and accessible properties. And we've talked about this over many podcasts in the past when we are doing our market updates. We saw a shift probably 2.5 years ago here in Brisbane where buyers started to move into the inner city locations, and we saw they were prepared to compromise on the type of property that they were prepared to live in order to stay in those more accessible locations. And of course, we believe this is also driven by affordability. So when people have a specific budget in mind, they have to assess what that budget will buy. And we are seeing that demand shift to let's stay in a more central location and live in a unit or a townhouse, as opposed to let's relocate and live much further away from the CBD and go for a house on its own lot. And I think that's why we've seen such strong performance in the unit market over the last 2 to 2.5 years.
A bit of convenience with the accessibility to transport and obviously to the CBD, and also a bit of low maintenance when you go into that unit market. Won't say I told you so, but I think if you go back to a podcast about 2 years ago,
2.5 years ago.
2.5 years ago, when we actually said on the podcast, I'll probably have to go looking for this one now, where we said keep an eye on the unit market, because we had a feeling at that time, we knew at that time what was happening, how things were changing, and that unit market has really progressed and performed exceptional really over the last couple of years.
Certainly has. And, when we look at the month-on-month performance in the house market versus the unit market, especially throughout the latter months of 2023 and now into most of the months throughout 2024, it's definitely been an outperforming segment of the market. So something to continue to watch because we're still seeing that trend right now across the city.
I know that I do say it in most of the market updates, but also, I guess, for any new listeners out there, jump onto our website and have a look at the blog that Melinda writes for the market update. You'll see a lot of details, graphs, and it really does explain the market update in detail. So if you are interested to have a look at that, jump onto the Streamline Property Buyers website and have a look at that. And it'll actually show you all the details of the blog as well.
And if you need the link, it is streamlineproperty.com.au/blog. And that's actually going to get you complete access to all of the most recent market updates that we have written and produced for our audience.
Perfect. Link straight there. How about that? Supply. Yes, that's obviously a big factor. We're still seeing limited numbers of properties come to the market, but supply to the property market here in Brisbane.
Look, whilst we're seeing limited supply overall, it's been reassuring in the last couple of months. The trend has been for a slightly higher volume of new listings month on month. So, for example, when we look at new listings between July and August, they actually increased 2.4%. And when we look at new listings in August this year versus August last year, the available properties that were newly listed were up 13%. So that's reassuring for buyers that we're starting to see a little bit more stock. However, on the other side, we're still seeing those transaction volumes or sales volumes remain fairly steady. So over the last 12 months, transaction volumes increased 7.5% up to July and 7.3% up to August. So transaction volumes are higher than this time last year, and listings remain relatively comparable overall, but more new listings coming to the market just in the last couple of months. So buyers will be relieved to see more listings coming through, and we hope that continues. But on the balance of supply and demand, we're still seeing more buyers in the market compared to the properties that are becoming available for sale, and that is why we're continuing to see that demand pressure pushing those prices upward in certain segments of the market.
On the ground, we've definitely seen some more properties come to the market. So listings have been a little bit stronger than what we've previously had. Keep in mind when you say keep an eye on next month's data, we are in school holidays as well. So that will have a bit of an effect, probably and we'll look at that next month when we do our market update to see if that does have any sort of effect on the market. Because as we've talked about in the past, school holidays tend to be a little bit quieter. People don't tend to put their properties up for sale when they're on holidays. But yeah, listing numbers, bit of an improvement from what it was. Buyer profile. So who's buying the properties? What's that look like in percentage wise?
Yeah, look, it's interesting. We can look at some ABS data to get an understanding of who's buying property based on what loans are being written. So in Queensland, and this is not Brisbane specific, it's all of Queensland, 38.2% of all housing finance commitments actually went to property investors. So that's actually really interesting when we consider that's higher than the typical ownership spread. So buyers who are property investors appear to be quite active throughout Queensland at the moment. First home buyers make up about 25.2% of the total buying market, according to finance commitments as well. So their participation in the market making up about a quarter of those buyers. And that's potentially why we are seeing strong demand, especially in Brisbane, in the more affordable segment of the market, when a quarter of buyers are, those first home buyers, and a further 38% are potentially property investors. So yeah, interesting trends and something that we like to monitor on a month-by-month basis.
And the main reason, obviously, there's good rental yields in Queensland, but in Brisbane, that growth in the housing sector.
Yeah, look, I think that this is Queensland data, and there are a lot of locations throughout the state as a whole that do have some quite strong rental yields and prospects for growth. I think, however, in Brisbane, off the back of the significant growth that has occurred off the back of the pandemic since the year 2000. 2020. I lost 20 years there. Since 2020, we've seen significant growth in both the house market and the unit market in Brisbane, and that's compressed investor yields. So because of that, those that are buying in Brisbane are still looking for that strong growth opportunity over the long term, given the opportunities that exist in the future, because yields have definitely been compressed in the capital city market.
It does seem like a long time ago when that COVID pandemic thing was happening. And
yeah,
I think you're right it's only 4 years ago, but it does feel like it's a long, long time ago now. Hopefully we can all forget about it. Auctions. So we've seen a slight ease between July and August. Average clearance rates dropping from 61.8% in July to 57% in August.
That's right. Although the number of registered bidders, according to Apollo Auctions data, remained steady at 3.1 registered bidders per auction. However, another indication that this has eased slightly is that the proportion of active bidders participating in auctions throughout the city declined slightly from 63.6% to 57.9%. I would like to add some commentary around what we're seeing and why that might be happening. When you have the number of registered bidders remaining constant month on month, and yet you have a clearance rate that's declining and an active bid rate that's also declining, it can be an indication of the fact that the expectations of the seller are moving at a faster rate than the actual market. That is what buyers are prepared to pay. And we generally see that there's a gap that continues to widen in a market that is growing in value month on month. And what this means is that although a property might not actually sell at auction under the auction conditions, quite often a multiple offer process follows, whereby those that were involved in the auction have the opportunity to submit an offer once an auction closes, and all other bidders who may not have been in a position to bid at auction also have the opportunity to submit conditional offers. Now, if you're listening to this podcast and you're not familiar with Queensland legislation, the highest bidder at auction here in Queensland does not retain an exclusive right to negotiate with the seller at an auction or after an auction passes in. So it becomes open to everybody to submit an offer, and a multiple offer process can quite often unfold And this can sometimes draw out a higher price, especially for buyers that were unable to be in a position to bid unconditionally. That is, they may have had a finance condition that they had to include because the banks weren't ready to provide them with an unconditional approval to bid. So that's just one example as to why people might be sitting on the sidelines waiting to submit a conditional offer once an auction passes in. And that hopefully explains, the gap between buyers and sellers, which continues to increase because sellers potentially are moving at a faster rate than buyers and the market as a whole. And that's why the clearance rate has dropped slightly.
And you might find some of those vendors move a little bit more than the buyers to close that gap up. But yeah, I think that's spot on. I think that gap is because the vendors' expectations are a little bit ahead of the market and looking to get a bit more money for the property they're selling. So dwelling values, Greater Brisbane, for those that are listening, and this is dwellings all over, continued in August with a 1.1% increase in the month, according to CoreLogic this is, and that brings the quarterly growth to 2.9% and annual growth to an impressive 15%.
Yes, that's right. So for all dwellings in Brisbane, the median value now stands at $875,040. And we want to reflect what that growth looks like off the back of the COVID pandemic. Values have surged by 65.1% since then. But on a month-by-month basis, we're looking at a difference at the median value level of $9,520. So that's based on that median value of $875,040 with a growth rate of 1.1% across all dwellings. So pretty strong change, especially if you're wondering, should I pay that extra $5,000 to secure the property? Well, the market's shifting at a median value level at $9,500 per month. So hopefully that helps to quantify should you or should you not pay that little bit more to secure the property in a market that's growing.
It shows you that the money in property. I think that's what it talks about here. You know, you look at that from, as you say, from before COVID, 65.1%.
It's huge
Increase on your investment on a property. Or equity if you own the property. I hear people say, "Oh, I should have bought back then." I think even if you stay it now, you'll probably look back and kick yourself if you don't do it again now, because I still think Brisbane's got more to go. Might not be that 65.1%, but I think there's definitely some good legs in it to invest into it as well and get into the property market.
Yeah, it's interesting. People often say, I don't want to buy at the top of the market in Brisbane. And it's a conversation that we have quite often with people who are a little bit hesitant, a little bit unsure. But based on what we're seeing, we're still the bottom of the market. And what I mean by that is we don't think values that are existing right now today are going to exist next month. So therefore, we're at the bottom, of the market, and prices are still escalating. So we are still seeing those prices increase month on month. So it's an interesting conversation when you turn it around and say, well, actually, 2 to 3 months from now, we do expect prices to be higher than they are today. So in actual fact, even though we are at the top of the market in Brisbane, we may actually also be at the bottom of the market because we are still on that upward growth trajectory.
Yep. So segments of the market, and this is something I've always been interested in, this part, to see what part of the market is actually performing the strongest. But yeah, the bottom section is obviously outperforming still, and that's been consistent now for quite a while.
Yes, there's sustained and strong demand for more affordable housing across Brisbane. There's absolutely no doubt about that. Of course, this has been bolstered over several months by the stronger performance in the unit segment, because this is all dwellings data. And we know that the unit segment of the market is outperforming the house segment by double at the moment. Now, when we look in the 3 months, the quarter up to the end of July, the lowest 25% of property values shifted 5.6%. In the 3 months up to the end of August, this dropped to 5% growth over that 3-month period. So it does also confirm or reconfirm that the rate of growth is starting to ease at the bottom segment of the market. In the top end of the market, so that's the top 25% of property values in Brisbane, in the 3 months to July, growth was sitting at 3% in that segment of the market. That dropped to 1.8% up to the end of August. So a faster decline in the rate of growth in the top end. And in the middle segment of the market, growth up to the end of July over the 3-month period was 3.9%. and that slowed down to 3.3% by the end of August. So we're seeing a deceleration in the rate of growth across all segments of the market, although that deceleration is more obvious in the most expensive properties compared to the cheapest properties across the city. And I will reinforce once again that this is all dwellings, so it does group houses and units together.
Just on that, on PropTrack, obviously CoreLogic was the first section, but PropTrack, that data supports a positive trend as well, reporting a 0.35% increase for Brisbane in the month of August.
Yes, and obviously both data sets should be showing the same trends if they're measuring the same sales and transactions. So yes, it also confirms that the Brisbane dwelling values are at their peak, with a very similar median value, according to PropTrack, $854,000 for all dwellings across Brisbane.
So housing market, again, seen an increase there. Values increased 0.9% in August. Quarterly house price rise of 2.5%, and an annual basis, they're up 14.1%. The median house price in Brisbane is $966,382.
And we are edging ever so close to the median house price in Canberra. So currently Brisbane's sitting in third place behind both Sydney and Canberra in terms of median house price value, whereas we are now less than $1,000 away from Canberra. So, of course, Canberra's market has retracted very slightly across the month of August, whereas Brisbane's market has continued to grow. So this is exceptional growth that Brisbane has experienced month on month, and it's still happening. So with a median value, according to CoreLogic, around $966,000 over the month of August, this resulted in a shift of just over $8,500 of price movement for a median valued house in Brisbane. So again, these are the sorts of numbers that will help you to quantify that monthly market movement. If you're looking at something as a comparable sale that transacted 3 months ago, it's really important to consider what has happened in the market in that time to come to a determination right now today as to what that property might transact for. Because in a moving market, these are the sorts of evaluations that you should be doing as a buyer to determine value.
PropTrack, again, we've seen that trend continue as well to increase 0.4%, and the median price there, $964,000.
That's right. So very similar to the CoreLogic data, same trends reported. Interestingly, now let's move across to the unit market in Brisbane.
So the unit market, CoreLogic, an increase, 1.7% increase in the values in August. Strong performance, bringing the quarterly growth 5%, and annual growth stands at 19.4%, I should say.
Let's just reflect back on the house market. So annual growth in the units, 19.4%. For houses, annual growth, 14.1%. So a big difference in the rate of growth there. Quarterly growth for the unit segment, 5%. For the house segment, 2.5%. So over the last 3 months, units have grown at double the rate of growth compared to houses. And monthly houses sitting at 0.9%, units 1.7%. So it doesn't matter how you dissect that data, the unit segment of the market is definitely outperforming. So with a median value for a unit now in Greater Brisbane sitting at $653,000, the difference between this month and last month at that median value level is $10,920. Now that's huge. That's a really big change at the median value level. But to really quantify this at the same dollar value, if you were looking in Brisbane at a house worth $900,000 and we look at the rate of change over the last month in a house value there based on 0.9% growth, that's a change of $8,100 over the month. But if you were looking in the unit or townhouse segment of the market, based on a 1.7% rate of growth at the same dollar value, $900,000, that is a shift of $15,300 over the same period. So I hope that helps to quantify what's happening in different segments of the market, because if you're looking at a unit or a townhouse, these are the sorts of numbers that you have to factor in to quantify for past growth, which is almost double what you're having to factor in when you're looking for a house. Now, of course, it's so important to be much more accurate than the median value at a city level, and getting an understanding of what's happening on the ground in a local market makes it even more accurate for you to price a property. But this just gives you some general trends that you can consider.
PropTrack also confirmed that trend. They're up 0.2%. And median price for a unit at $655,000, slightly higher than CoreLogic.
That's right.
So the rental market.
Okay, well, it does remain competitive. Vacancy rates remained steady. So they're currently sitting at 1.1% across the city. That's as at August. The tight rental market has continued to push rents up, although I will say that the annual rate of increase has definitely been easing throughout Brisbane. So the annual rate of increase for rents for houses in Brisbane is at 6% right now. And for units, it's at 6.2%. So we now know unit rents are growing at a slightly faster pace than house rents, but there's been a substantial fall in the rate of rental price growth for both segments of the market in recent months, which is a huge relief, I'm sure, for tenants, especially as they're coming up to those renewals. It's been a pretty tough couple of years. In the last 2 to 3 years, tenants have endured between 20 and 30% rent price increases throughout all of Greater Brisbane. So, that's a huge, huge increase in the cost of living for those that do rent in the Brisbane market. And it's something that's just contributed to those affordability issues across the board.
Yeah, I think people looking at renting or to do rent will be quite happy to see those numbers have settled down a little bit. So vacancies in the areas, if you can break that down a little bit.
Yeah, so vacancy rates obviously in different parts of the city are a little different, as are the rate of rental price increases. But we're going to talk through vacancy rates. So in the Beenleigh region, they've remained steady between July and August, sitting at 1.1%. In the Brisbane CBD, they've slightly increased from 1.8% in July through to 2% vacancy in August. East Brisbane sitting at 1.2% vacancy across both months, so that's remained steady. Inner Brisbane, the vacancy rate there has increased from 1.4% to 1.5%, so only a very small increase. In Ipswich, vacancy rates have also increased slightly across the 2 months from 1% in July to 1.1% in August. Northern Brisbane increased slightly from 0.7% to 0.8%. Still the most tightly held part of the city or region of the city based on vacancy rates, which, as we know, vacancy rates is an indication of supply. And so therefore, when we look at rental price increases, it's most likely that they are continuing to escalate at a faster rate in those Northern Brisbane regions where there's a lack of stock. In Southeast Brisbane, vacancy rates went from 1.2%, slightly down to 1% over the 2 months. Southern Brisbane from 1.2% to 1.1%. So these markets are tightening with fewer rental properties available. And in Western Brisbane, sitting steady across the 2 months at 1.1%.
So yields in the rental. So obviously the rental side of things for the investors, we talked earlier about good yields in Brisbane. So gross rental yields in Brisbane are currently sitting at 3.5% for houses and 4.7% for units.
I think what we talked about is the fact that yields have been compressing in Brisbane and they're more attractive across the state. But as those numbers point out, for houses, the gross yields for Brisbane are actually pretty ordinary compared to what historically they have been. However, they're still attractive in the unit segment of the market, sitting at 4.7%. Of course, these are gross yields, and investors must understand the costs associated with holding each different asset type to get an understanding of the net yields that they would be receiving for that particular property.
So a bit of a summary for August. As we're seeing on the ground, as I mentioned earlier, we are seeing a few more properties come to the market. We're still seeing a lot of buyers out there. And I think that obviously, as you talked about, that tight supply and high demand will keep driving prices, I think.
I will say, when we're out and about on the ground, quite often, we are usually looking at A-grade properties for our clients. So we're not able to report on what's happening on the ground in properties that might be flood impacted or properties that are on a main road. And in fact, we did pass an agent on Saturday that had and open for inspection on a main road, and we commented, oh, no one appears to be there. So that segment of the market, there may not be buyer volume that we talk about, but just around the corner in the quiet part of the suburb that we were looking at for our client, there was definitely strong demand from buyers on that property. So, we can't talk about what's happening in Brisbane with accuracy. We can't even talk about what might be happening at a suburb with accuracy, but we do know on A-grade properties in the better parts of the suburbs, there is still strong demand for quality homes. Now, anything that obviously has defects or sits on a main road or maybe in flood impacted areas, as an example, of course, the demand for those sorts of properties is not going to be as strong. So keep that in mind as you listen to our podcast. We are really looking at the best parts of the suburb when we are representing clients, especially if we're looking for a property investor.
Obviously, infrastructure development, a lot of development happening. The Queen's Wharf, first section of that opened up recently.
That's exciting. Yeah.
Which we mentioned, I think, on a podcast or two ago, that they'd started to open up sections of the Queen's Wharf. You've got really good economic growth, low unemployment. There's jobs everywhere, and obviously more major projects that are just around the corner to happen as well.
Yes, and I think that, it's important to say that although the rate of growth in Brisbane is clearly slowing when we look at those quarterly numbers, house values and unit values do remain, they're supported by a long-term shortage of new supply. So this situation, it's been further exacerbated, in my opinion, by the ongoing challenges within the construction industry here in Queensland. When we look at the number of new dwellings under construction, it's certainly well below targets that the federal government have in place to meet the requirements of our population. When we look at the number of higher density unit developments under construction in the city, again, it's underwhelming here in Brisbane. We simply don't have a high volume of new properties being built, and that's going to impact that longer term supply. Now, it's reassuring to see investors coming back into the market when we look at that lending data, because that's going to hopefully help to provide more rental properties for tenants that need to find somewhere to call home. Because as we know, and we've reported previously, that we've seen a lot of those investors sell out of the market. I will say, and we will do an episode within the next couple of weeks about this topic, but the Property Investment Professionals of Australia have just released their survey results from the Property Investment Sentiment Survey. And, Brisbane is definitely one of the locations, or Queensland as a whole, where property investors have sold out in the last 12 months. So that's another concern that we have. Although we've got a high volume of investors looking to buy back in, we've actually also seen a high volume of investors sell their investment property in the last 12 months. So the supply is lower, even though that we've got more investors jumping back in. So we're going to tackle that in a separate episode, because it's not, we won't have time to cover it today, but I just thought I'd give you a bit of a glimpse into those results as well.
Maybe some people cashing in on what they've made on that 65.1% that we talked about.
That's true.
I didn't touch on earlier. I know that we'll jump into and we'll give you more updates as we go along with infrastructure, but just recently, Brisbane Airport, massive overhaul on Brisbane Airport. Anyone that's been flying in or out will notice that. Domestic and international airport is having a huge overhaul out there. So a bit more money getting put on the spent in the infrastructure when it comes to the tourism and the transport around Brisbane, which is, again, another good thing for Brisbane to they're putting money into the state, which is great.
And those here in Brisbane will know we need to brace ourselves. We have a state election coming up, and in October we're going to know whether the current Labor government sees itself in Parliament for another term, or we might have a change of government in that time frame as well. But I think, like always, when we see elections pending, that can create a level of uncertainty for people. So we might start to see the market respond in a way that things remain relatively flat until we get an outcome. Because once we have that certainty, generally people are more comfortable to make long-term decisions. I will say, though, regardless of which government gets in, we have been promised 50-cent transport services on public transport facilities, regardless of as an ongoing election commitment. So that is promising for people that do rely on that public transport, because that's a very affordable way to get into and out of the employment hubs around the city. And it highlights the importance of being on a public transport corridor as well. But I think the uptake since the government has introduced these 50-cent fares has been significant. And so they've made it an election commitment, and the opposition have agreed to match that election commitment. So a big win for Brisbane public transport commuters.
Uber might not be too happy about that.
Maybe not.
People are getting public transport as opposed to Ubers and taxis. Looking forward to that election too. I think there might be some positive things happening around Queensland. In conclusion, really?
Yeah, look, I think that it would be remiss of me not to mention that the affordability constraints that are starting to be seen in some segments of the Brisbane market are real. People need to understand the local nuances for anyone looking to buy or invest in Brisbane, particularly in navigating the affordability challenges that are most likely going to persist. You know, we've talked about this and how that's changed buyer behaviour to really focus in on that unit and townhouse segment of the market. But there are locations where people just cannot afford to pay more in rent, cannot afford to buy property as locals. You need to be aware of these locations because this is real. Prices are continuing to escalate. You do want to buy something that's not going to be at risk of losing value. So all I can say is be aware that there's going to be affordability constraints in some segments or in some locations within the Brisbane market. But all of that said, I definitely think Brisbane does continue to provide very strong opportunities for capital growth. But as I've highlighted, careful consideration is definitely required to navigate the evolving market dynamics. It's not all, the rising tide will no longer lift all ships. Is that the saying?
I think that's it.
That's it. I think that people need to be very aware of local nuances, and that's all I'll say about that.
Yeah, local knowledge and knowing the right areas. I think great update. Again, positive for Brisbane. I think there is positive signs and everything looks positive for Brisbane. Even the weather, as I mentioned earlier. So, as usual, look, if you're looking for property and you need a hand, just reach out to the team at Streamline Property Buyers. We're here to help. That's what we do, is help people. We love doing what we do, and helping people is what we really, really enjoy doing to get those properties that people are looking for, whether it's your home or whether it's your investment property, to set up your wealth in the future. So, great update, and I will let Melinda wrap it up as I normally do. From myself, thanks very much for listening. Take care, and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. As always, we hope you have enjoyed this episode. And if so, please share the episode with friends and family. Hit that subscribe button so you don't miss any future episodes. And we would love for you to leave us a review on whichever platform you're tuning in on today. Once again, we look forward to speaking with you next week. Until then, bye for now.